My name's Kevin Jones. I'm a bit of the host for this webinar today, October 23rd. With me today is Vishal with HostAllies. We have Corey Reed with Clearing and Logan with Ramp. If each one of you guys want to give a quick little intro, we'll get started. Start at the top.
So good afternoon, everyone. My name is Vishal, the founder and CEO of HostAllies. Over the last decade, I've been closely involved in short-term rental property management, first as an investor managing my own portfolio, then as a property manager managing properties for others, and most recently, a service provider providing accounting and financial management services to the industry. So I'm excited to present my perspectives from living all these rolling roles and wearing all these unique hats. And I'm looking forward to this panel with Corey and Logan to share our ideas on how short-term rental operators can unlock hidden profits by implementing an integrated accounting playbook.
Oh, Corey?
Yeah, hi everybody. I'm Corey. I'm with Clearing. So my background's always been kind of in the last 5 years in the short-term rental space. I used to work on a property management software side of things, and now I'm with Clearing doing more of the financial management for short-term rentals. So definitely have worn a few different hats in this industry, and a big fan of it. Love the industry, and just love to see the ecosystem that exists here. And so excited to be here to chat with Vishal and Logan today.
Awesome.
Yeah, thanks for having me, everybody. My name is Logan, but I think more importantly, Vishal, I love your haircut, man. You look good. I'm on Ramp's strategic partnership team. So I actually partner both with Clearing and HostAllies. And we'll get into more about what Ramp does, but we provide all-in-one financial solutions for short-term rental, property managers, and really any industry in the United States. And so we'll definitely dive in, but excited to really banter today. So thank you.
Logan, do you have a good joke for us? You were saying that you have a joke for your newborn.
He's 18 months old, so I think he just finds everything funny. So
Okay, got it. Thought you'd have a dad joke right in your back pocket or something already.
Maybe when he starts to talk, Kevin,
Okay.
I'll have
Fair
some
enough.
jokes.
Fair enough. All right, Vishal, let's get rocking. All right, so a little bit about VRNation. This is what we do right here, is we bring some thought leaders together to educate, to inform vacation rental managers, hosts, and to help you become better. So as you can see, this is our mission. This is an active participation webinar, right? So these guys are going to go through, they're going to explain and hopefully teach you. This is an educational session, right? And then it becomes interactive towards the end. So it is not really a sales pitch. It's to say, hey, this is how you do things. Here are some ideas on how you could do things better. And oh yeah, by the way, there are some software tools involved, but like this is what we as VRNation do. So this is what you get as a member. We have an annual conference that is coming up in April. We just did road shows throughout the country. We just finished up one yesterday in Lake Tahoe. We had one earlier this fall in Breckenridge, and then out in Florida as well. So this is what we do. So with that, I urge you to become a member. I urge you to to come to our conference this April, and get involved and learn great stuff. So here you go.
Great, thank you. So I wanted to start this webinar on financial accounting and financial best practices with a quick introduction to HostAllies and the philosophy behind our genesis. As I mentioned in my introduction, over the last decade, I've closely been involved in the property management space in various capacities. In these roles, I've gained firsthand knowledge of the challenges property managers face in managing their accounts and finances while they are trying to grow their business. And there are two primary reasons for this. First of all, property managers have various other really important things to focus on, such as taking care of their guests, managing the health of their properties, acquiring new owner clients, and growing their inventory. With all that going on, there are not enough hours in the day to focus on back office tasks like bookkeeping and managing finances. Secondly, Back office accounting and financial management can be really complex in our industry, time consuming, and it does require specialized skills and training. So that's why we built HostAllies to help property managers manage their back office so they can focus on their front office. This way, our clients can grow their business and we provide them with the tools and reporting to ensure that they're doing it profitably. We go beyond bookkeeping. We help managers set up scalable processes, manage their statements, their taxes, and streamline everything from onboarding to financial reporting. We service multiple boutique short-term rental firms from 10 to 150 properties and also select large franchises. And we've had the unique experience of working across multiple PMS providers. So in today's webinar, we are going to share somewhat what we've learned, and in partnership with Corey and Logan from Ramp and Clearing, we'll talk about a playbook that you can apply that will help you streamline your accounting process and unlock hidden profits from your short-term rental business. So to get into this, I wanted to start by discussing what short-term rental accounting is all about. There are two integrated or interrelated but distinct accounting streams in property management: financial accounting and trust accounting. Financial accounting answers the questions like, how profitable is my management company? Are my costs going up or are they going down? It covers all the business's money, the income, the expenses, taxes, and operational reports. Trust accounting, on the other hand, is about stewardship. It's about managing money held on behalf of owners, guests, and other stakeholders. It means carefully tracking funds, staying transparent, maintaining compliance, and generating frequent owner statement. This is a process. Trust accounts have to be managed, reconciled on an ongoing basis. They are regularly audited, and maintaining the integrity of the system adds to your credibility. So for anyone who's new or has recently joined the property management business, it's crucial not to blur these lines. And also for experienced property managers to keep this top of mind. Both these practices support healthy business growth, reputation, and legal standing. Think of this one slide as your accounting map. Keeping these two parallel systems strong builds your business on a rock-solid foundation. So let's talk a little bit about how the balancing act. These practices, balancing trust and financial accounting, feels like walking a tightrope, but it is essential because these practices are inherently different from each other. Trust accounting is about handling money that isn't yours. It's about owner funds, deposits, vendor payments, tax collections. Financial accounting is about managing income and expenses that belong to your property management company. As part of trust accounting, you're dealing with things like owner statements, trust fund audits, whereas in financial accounting, you're dealing with profit and loss statements, balance sheets, and tax filings. And finally, the tools that you use to implement trust accounting, like clearing, are inherently different that you use to deliver your financial accounting, like QuickBooks. So this slide just talks about the inherent differences between these two systems. But even though trust accounting and financial accounting are each distinct domains, in practice, they're deeply interlinked. For example, the revenue data that you need to create your profit and loss statement or your financial account actually has to come from your trust accounting process. The expense data that you may put on an owner statement might actually originate in QuickBooks or in your company financials. That's why managing these processes in an integrated manner is essential, even though the ledgers are separate. When data from your trust accounting is routed into your financial workflows seamlessly, you eliminate double entry, you prevent errors, and you make audits straightforward. Real value comes when both systems talk to each other. The trust transactions inform your owner statements, which update your financial ledgers, helping you deliver complete, accurate reports to your owners, regulators, and to your own team. So let's talk a little bit about the importance of this. Getting trust and financial accounting right is vital for various reasons, as you can see on this slide. But I want to talk to you about the three main reasons. First, segregation of fund. Segregation of fund ensures you're managing your fiduciary duties and protects you against legal violations. Secondly, maintaining compliance and accuracy gives you a good, accurate view of your financial health. And thirdly, this discipline actually impacts your business valuation. When it is time to sell your company, raise capital to expand, clean books speak volumes. So in conclusion, if everything is consistently tracked, the sky is the limit for growing your business and building lasting trust. A property manager who can confidently show compliance with their trust accounting and performance with their financial accounting becomes indispensable to owners and investors. So let's talk a little bit about the dangers of poor accounting. So Halloween is close, so it's a great time to talk about a horror story here. So let's dive into what happens when trust and operating accounts aren't managed right, with a sort of a cautionary tale. There's this company, ABC, that was not practicing true trust accounting. They were only using their bank account for both operating and trust accounting purposes. And that actually worked okay when they were small. But as they grew, it became harder to keep track of things. They were collecting advance deposits for future reservations, and they ended up using some of those funds to fund their current expenses. As a result, when the time came to pay their owners, they didn't have money. Owners eventually ended up getting paid months later, and the company had to take up a loan to true up with their owners to save their business. These kind of horror stories aren't rare. Managers who skip proper accounting end up spending more time cleaning up mistakes than growing their business or serving guests. So to protect yourself and your business, dedicate the time and energy to get your accounting practices set up right. So now that we've established how important this is, let's try to understand the main challenges property managers face in getting this right. We see three pervasive challenges in short-term rental accounting: revenue recognition, expense management, and asset and liability management. In the next few slides, we'll deep dive together in each of these in detail, and we'll talk about what causes these challenges and share with you an integrated playbook to address this. So let's start with the revenue recognition challenge. Let's talk about this most common and most painful challenge in short-term rental accounting called revenue recognition. When money comes in from bookings, it seems simple at first, but once you dig deeper, the questions can start piling up, and they're not always easy to answer. Property managers always find themselves asking questions like, how do I accurately split my booking revenue between myself and the owners? Is my booking showing up in the right owner statement? If the booking doesn't match with the payment, how do I reconcile it? How do I not reconcile one booking, but 200 or 300 bookings that I may have received, right? And at the end of the day, for each of these reservations or each of these bookings, how much did I actually earn? And how do I reflect it accurately in my own financials? Each of these questions looks small on its own, but together they represent the bigger challenge of revenue recognition. If you don't have a system in place, you risk errors, wasted hours, and worst of all, losing owner trust and losing a lot of money. So at this point, I want to invite Corey to talk a little bit about how one can overcome these challenges with an integrated revenue recognition process. So I'll hand off to Corey to introduce clearing and then talk a little bit about that process.
Yeah, no, absolutely. Thanks, Vishal. So, I mean, you hit some things right on the head there, right? There's often kind of two areas people come to clearing, and they're they're really making big mistakes when it comes to trust accounting. And one of them is certainly revenue recognition. The other being something else we'll talk about a little later on, which is the expense management side of things. And so you can think of it this way. Your PMS is going to have a booking, and that booking is going to have certain financial information on it that is related to, of course, that booking. Now, it goes to the OTA, it's collecting money, the OTA pays you out, and it's usually either through a payment processor or something like Airbnb, for example, who pays out yourself or pays out themselves. In those two different processes, you have two different ways that they're doing it. Some are paying you out on the actual reservation. Some are paying you out when the guest checks in. So you're already dealing with differences in the actual approach for how money is getting into your bank account. Where it comes to owner trust and where it comes to getting your revenue accurate and where it comes to getting your owner statements proper really comes down to, being sure that the money that's in your bank account matches against what that booking says. And that's not often or always the case. Sometimes there's discrepancies, and those discrepancies really, at the end of the day, think about it this way. If you get an expected payout of $6,000, but you only receive $5,000, that $1,000, your owner statement is being built off of that booking and the financials that are on that booking. So your owner statement is looking to say, hey, well, we made $6,000 in this booking, but your bank's telling you, hey, no, you only made $5,000 in this booking. So that $1,000 difference, quite frankly, usually turns into an owner overpayment. So if you're not reconciling every single booking, and in a lot of scenarios, most of the systems out there, you have to go through and reconcile every single booking through either connecting it to QuickBooks and then tying it into the deposit amounts, or you're doing it in the PMS directly through a manual upload of your bank statement. And so this can create a lot of bottleneck around the amount of time it takes to actually get this done. And so clearing was basically purpose built from the ground up for essentially this process. It's where we started off. This first thing we ever built was around revenue recognition and making sure that we can get the revenue accurate on an owner statement. So we built a system that connects to your bank accounts, credit cards, various other financial systems to basically bring everything in together, reconcile that revenue, and make sure that what you're receiving on that booking directly matches what's in your bank account. So you can have peace of mind when you're clicking that pay owner button, which you can do in one click within the software. You can then basically have peace of mind that the money that's going to them, at least from the revenue perspective, because we're not talking about expenses yet, you can make sure that that money that's going to them is accurate, and you know that the amount you've received is accurate. We do various other things like keeping client funds separated by having a different process for how you deal with the trust accounting than what you're passing over into QuickBooks for the operational side of the accounting. Quite frankly, we do it a little different than any other system out there. Tracks liabilities so that you understand how much you have in security deposits, advanced deposits, taxes and owings to vendors, so on and so forth. Money allocation by property and stakeholder becomes a lot simpler when you have it in an integrated system, which I'll talk about in the next slide. And then basically, like, our system's really built to scale. So in a lot of ways, when it comes to this practice in general, the practice is really cumbersome because you are often having bulk deposits coming from your OTA, which are made up of many bookings, and you're trying to break it down into individual bookings in systems that aren't necessarily talking the way that they need to in order to be able to do that programmatically. And so by leveraging a system that does it programmatically, you can do that in minutes or seconds versus, hours, which is what we are seeing in the industry today. And so really it all comes down to that integrated revenue recognition approach that Vishal was talking about. And so just to kind of paint the picture, I kind of mentioned it already, but essentially when you're working in clearing, you have various sources of data. So you have your PMS data, the guest bookings are coming from the PMS. You also sometimes have work orders and stuff coming from the PMS, or maybe you have, payment processors built into the PMS that are depositing the money from the OTA. There's a lot of different variations in all the different tech stacks that are out there in this space. As we know, there's hundreds and hundreds of technologies in this space, and every single one of them does things a little bit different, including all the OTAs. And so you have the PMS data. You also have the OTA information, so the payouts coming from the OTA. You have payment processing. So basically Stripe, the different types of payment processors that are out there, vacation rent payment, you name them. There's various ones that people use in this industry as well. And then you have your bank account data, which is basically your source of truth, because that's the money that's actually landing in your bank account, and that's the money that you're actually needing to report on. And so by pulling in the booking data from the PMS, cross-referencing it with the data from payment processors and the OTA information that we can gather, and then basically tying that into what the deposit is from your bank account. It basically creates a scalable process around this revenue recognition piece that basically allows you to, instead of having to go through every single booking, you're really only concerned about the ones that don't match. And if they don't match, that turns in, like I said, that turns into an overpayment or underpayment on that owner statement. So it's quite pivotal that you actually make sure that every single one of those bookings is fully reconciled. And we work with various different accounting firms. Of course, HostAllies being one of our partners that are basically doing a lot of works and services for the clients that we're working with. And a lot of the times they say like they won't pay out on bookings unless that fund is fully received, because you want to make sure that you have that booking reconciled before you go and move that money to the owner. And then ultimately beyond that, it's about, okay, well, we just made the money movement to our owners. Now what's going to all of the other disbursements? So essentially like your management company, your taxes, vendors that you work with, security deposits. What do you have in security deposits in that trust account? These things are super important that you have understood and documented properly. Otherwise, you run the risk of basically commingling those funds and not having the funds to pay for certain aspects of this. So at the end of the day, once we get through the reconciliation of the booking and create those owner statements, the next step is figuring out, okay, well, now what do we need to move into our management company? Because that's the true revenue to the business. And that's where QuickBooks comes in, which we have a two-way sync with. But basically, you can then pass in the data that you need so that you can keep clean books. Ultimately, all of this comes down to keeping clean books, because you're handling trust in your trust account, and it's a separate set of books than your operations, which is in your QuickBooks or in your operations account. And these two things need to talk, and they need to be, very much so intercombined, but still kept separate, so that from an audit perspective, you know what's property level and you know what's business level. And so ultimately, that's the integrated approach that we talk about. Now, Vishal, I know that you work with a lot of clients that are dealing with, trust accounting, different types of financial kind of systems that they have when they come to you and they're getting set up. And then you go through an audit process with them to kind of understand how their books currently look. If you see that things aren't aligned from a booking reconciliation perspective, and you're seeing that like the amounts in the bank accounts aren't matching what's in the actual booking, where do you first go looking for a root cause? Is it the PMS? Is it a bank feed? Are you looking at, OTA data, or are you coming into clearing? Like, where are you finding that root cause so that people can know where to look when they're actually starting to, explore maybe how they can make this process better for themselves?
Corey, that's a great question. And I think it boils down to setting up not only the right system, but setting up the data and the processes in the right manner, right? So one of the things that we focus a lot on is revenue ledger mapping. Sometimes when you're trying to connect a PMS to a trust accounting system like clearing, and a trust accounting system then to a financial accounting system like QuickBooks, one thing that gets glossed over is mapping the revenue related data fields across these systems in a way so they actually say the same thing. Is cleaning fees in the PMS, cleaning fees in your trust accounting system like clearing, and cleaning fees in QuickBooks, right? So the ledger mapping is a very important step that from an accounting as a professional, we spend a lot of time on. The other thing that we spend a lot of time is on making sure that the data is aligned right, matching all the bookings, the fees, and the payout data in the trust accounting system like clearing with the revenue entries in QuickBooks. No matter whatever perfect integration you do, there's always going to be some data alignment issues that you have to fix over time. Once you get it right in the first couple of months, it becomes much more easy in the future months. But it's really important to get the data alignment. That's where some of the biggest errors come up. And finally, variance detection, right? There could be timing or categorization mismatches that are happening across systems. A booking may show up in a particular month in your PMS, in a different month in your trust accounting system, and it's being recorded, the payouts are being recorded in a different month. So identifying these timing or categorization issues is the third step of that process. So by doing these routines regularly on a monthly basis, that's where you can catch these mistakes that make and align your revenue better in a consistent manner going forward.
So then
So that's
ultimately, I guess
So
ultimately, like when somebody comes to you and they're brand new and they're looking for, you know, they've realized their trust account's out of balance, because that's often when people start coming to you, right? It's when they realize that there's already been issues and they're going, oh no, I need to fix this because I have to pay owners and my balances of my trust accounts for my owners are out and I don't really know where this is happening. Are you doing like a full scale audit and kind of looking through all three of those sources then? Or are you kind of just starting somewhere and then kind of a process that you follow in general? Or like for somebody that's new to this and kind of just getting through it, where would you suggest that they look first?
I would suggest that they look at the alignment across all three systems. Obviously, you have to start with the PMS because that's the source of truth where the bookings originate. But then you have to map everything from the PMS into your trust accounting system and
Right.
into your financial accounting system. And those are the inconsistencies which solve about 60-70% of the problem. And then the rest is about data alignment and variance detection.
Got it.
Great
Great.
question. I think we've covered some of the best
Yeah.
practices. Go ahead, Corey. Yeah,
I was
you.
just gonna say, I mean, it's a good alignment now to go into basically like the other big part of the problem, right? Like we talked about revenue recognition and how getting that right is good from a revenue perspective, but then there's a whole other side of it, which brings a whole bunch of its own kind of configure complications. That certainly is another big part of the picture. So
Exactly. And so we bring up point number two, which is expense management, right? So expense management, like Corey rightly said, is the second big challenge. And in some cases, actually, the most property managers when they end up losing money or they're not profitable, it's not only because of the revenue, but because they're not being able to manage their expenses in a standardized manner. So many times you talk to property managers, they have questions like, is this expense an overhead or is it related to a property? Did I charge it to the right property? Have I categorized my expenses correctly? How do I come up with a report that tells me what all my expenses are? And finally, the big question people ask is, how do I control these expenses better? How do I proactively prevent expense creep? So this is a topic which is very hard to do in a reactionary way. So you have to build a sort of a automated best practice around expense management. And I'll let Corey speak a little bit about what that process could look like for you.
yeah, and I'll keep it brief here because we do have a great client or a great partner as well that kind of this is their main focus. But ultimately, what it comes down to is how often I have somebody that I jump on a call with and they go, I ask them, how are you kind of tracking your expenses today? And they go, well, somebody grabs something, they bring the receipt in, they put it on a spreadsheet. We keep that spreadsheet for the month, and then we deal with the expenses manually in our PMS to get them on the owner statement. And so that process in and of itself leaves a ton of room for human error, because if somebody forgets which property it was supposed to go to and writes down the wrong one in that spreadsheet, well, now you have an inaccuracy that could turn into, their owner confidence going down because they don't have the proof that it actually happened, right? So at the end of the day, you have expenses in many different systems. You have expenses from your operations that sometimes are being bailed back to the owners that need to get into the statement as a reimbursable expense. You have expenses going through your tax management system, whether that's maintenance jobs, supply costs, hourly rates. You have expenses going through your purchasing. Maybe that's on Amazon Business, or maybe that's through your credit cards that are, ramp cards, for example. And then you have basically clearing, which is centralizing a lot of that data and has a lot of built-in algorithmic kind of ways of dealing with expenses. We have reactive ways where it's after the fact of the purchase, but then we also have those proactive ways. And really that's when, ramp becomes a very big part of this picture, because they're doing things that really no one else does in the space. And they're, as I said before, changing the world for expense management.
So with that, let's invite Logan to talk about expense management and best practices. Logan, take it away.
Yeah, I think Corey said that unprompted. I didn't even have to tell him to say Ramp is changing the world. Uh, so a lot of people haven't heard of Ramp. We're only a 6-year-old company, but the vision of Ramp is connected finance. So the things that Vishal is mentioning as well as Corey, it's like there's this disjointed picture of what's actually going on in your business on the revenue recognition side as well as the expenses. And so what Ramp does is we're the single umbrella for all your non-payroll spend. And so expense management is probably a term some of us are comfortable with, some aren't. And it's not necessarily a new concept, but when we actually break down what it is, it's probably easiest to tell through story. And so this is probably a story that we all resonate with, where say you have a property management company and you've got folks who are spending on a company card. Maybe you've got some folks who don't even have a company card because maybe they're a new employee or you don't trust them or anything like that. And so they're submitting reimbursements. In addition to that, maybe you've got, 100 plus properties and you need to track like, hey, what transactions are coming from what property? No, I'm not a property manager. I'm not in the STR space, and that's probably why maybe I have a more like unique but ignorant perspective here. Um, but I can just imagine the headache you guys have to manage every day. And so in that instance where you've got all these different tools, you've got people requesting reimbursements, you've got a card, and how are you getting all this information back into a system like Clearing or QuickBooks? And honestly, the simple answer to make all this straightforward is you can just use Ramp. So what Ramp does is when someone swipes their credit card, they immediately get a text message that says, "Hey, what was this transaction for?" and upload a picture of your receipt. They don't need to download an app. They don't need to log into a browser. They can do their full expense report. The next question they might get via text is, what property was this associated with? So within 10 seconds of a transaction happening, you've just completed the full picture of what this expense is. Again, no apps or any need to log into a browser. And we sync with Clearing, we sync with QuickBooks. And so that chart of accounts or all the record of your properties is coming into our platform, literally zero human intervention. So that's the magic of Ramp. The like headline here is I onboarded a nonprofit probably 6 months ago. The average age of a cardholder was 75 years old. They've had zero issues using or implementing Ramp. And so when you think about your practice and really sometimes like maybe the lowest common denominator of an employee, at least on the like on the scale of how technologically advanced they are, Ramp is a system that can scale with you. It's bringing in all this source information, and within seconds of a transaction happening, it's ready to reconcile and push into Clearing or push into to QuickBooks.
Great. Thanks a lot, Logan. I just wanted to talk a little bit about um, uh, just best practices around expense management. So, Logan, I know you have some other thoughts to share here, and you probably we can banter a little bit around this.
Yeah, yeah. Of course. I want to ask Corey, because since we're creating this like complete financial picture with all these different tools, whether it's Clearing and Ramp or any other of these systems, what are some of the common points of failure that you see, and how can operators prevent them, especially when it comes to month end?
Yeah, I mean, definitely the first thing that comes to mind is getting the property allocation because, a lot of the tools out there that were traditionally being used, like, Expensify, these kind of expense management system tools that you purchase something and you take a picture and then you upload it to the system. It does rely on somebody, tracking it down and making sure that they do it, because if you don't do it and you don't get that property allocation on there, then ultimately, if it's a reimbursable expense, you don't know who you should be pulling that money off of from an owner statement perspective. And so getting property allocations is definitely a challenge for people in this space because quite frankly, people are busy. People forget about these expenses. They forget about the receipt that was in their drawer that they should be getting money back on. And that turns to expense leakage, which turns to, less revenue for your business ultimately at the end of the day, if you're paying those expenses on behalf of the owner. And so, working with a Ramp Clearing type integration or a Ramp QuickBooks type integration, I think the important thing to know there is like, you can have Ramp cards for operations. You can have Ramp cards for specifically your reimbursable expenses with properties. And you can set up even just virtual cards that are paying for expenses online that can be tied directly to a property's address and tied directly to a property. Now, taking it further, being able to get that text message and having that property indicator directly through a text message that makes it easy to split it between properties or easy to just tie it to one property. It's really, enhancing the way that people are able to actually get their processes done in a quicker manner because it's more proactive. I always use this term proactive versus reactive because Ramp is proactive. It's reaching out to you saying, hey, we need this information. You're not relying on uploading an expense or a receipt when you find the time to do it, because we all know that if you're in a busy situation, it's pretty hard to find the time to do expenses, even though you need that money back. So that's where I'd say there's a lot of challenge, though, is ultimately getting the property allocation and making sure that's right, because that turns into errors in your owner statement. If you build the wrong owner and they catch you, that turns into confidence issues. If you don't get that money back, that turns into profitability issues. So there's ultimately a big issue with making sure that that property is allocated. Categories is hard too, but I mean, property is certainly the harder one. And then I guess to ask you, a simple question alongside that is like, what simple automation or policy from Ramp have you noticed get like the biggest ROI for people that use your cards?
Yeah, I mean, I think the number one thing when it comes to automation is just start somewhere.
Right.
And I think Corey and Vishal, they've seen Ramp internally, and so they know some of the capabilities. But for someone who hasn't seen it, you might just create a simple rule with 2 clicks in Ramp that says, we are going to require that property allocation on every expense. So that means if they don't in 7 days, Ramp is like the bad cop. You don't have to
Exactly.
go chase people or anything like that. All of a sudden, Ramp is locking their card. And so then when that property manager goes to swipe their card or the maintenance staff goes to swipe their card, they're like, oh, shoot. Like, I do need to follow the rules. There's a layer of accountability. So all of a sudden, you've increased your compliance. Our data shows by over 85%. Basically, the day you implement Ramp, and Vishal can talk about that, the implementation typically just takes like 30 minutes. So in 30 minutes, you're going to save hours and hours of chasing people, better reporting, just like you've mentioned, literally in 15 or 30 minutes.
Yeah, I certainly can see that in some of the people that are using Ramp. And I mean, even companies like use Ramp, our company uses Ramp, and from a corporate perspective, all across the board, there's a value from an expense management perspective that I think you hit it nail it on the head there.
And Vishal, I think we hear a lot of PMs talk about how expenses feel like a black hole. What's the biggest misconception you see, especially with like trust versus operating expenses?
The biggest misconception is that this problem cannot be solved without hours of manual effort at the end of the month by an accountant or the property management owner. In fact, it's the exact opposite. And that's what we are talking about here, right? Managing expenses effectively is not about the struggle the last 8 hours every month. It's about establishing a process across the team using the technology of tools like clearing and RAM so that expense management becomes second nature to everybody. And even with these tools, I think that these three best practices, having a expense captured correctly, the cross check and the control, right? The capture part is to be able to set up the processes. Like we just talked about, Ramp integrates with QuickBooks, Ramp integrates with clearing. If you can set up the differentiation or the segregation of your expenses up front, that only trust account expenses go into clearing, all overheads go into QuickBooks, you already solve a lot of your problem of commingling the expenses. At the second time, you also have to cross-check, right? You have to make sure that you're cross-checking across all the systems to ensure that you're not missing any expenses, because sometimes that happens. And finally, it's all about establishing the right controls, standard approval processes, vendor payment processes, and accurate reporting and expense controls through reporting that clearing can provide you, QuickBooks can provide you, and RAM can provide you. So that's kind of how these best practices come together to really help you with managing your expenses effectively, along with tools like clearing and RAM.
Can I jump in here, Vishal?
Sure.
I think that if you haven't seen this before, it's such a like philosophy change. Like if right now you're doing things manually from like a trust perspective or an expense perspective, you've seen how things are done, and you might hear about something like this. All of a sudden, that reactive process is done proactively with software. And like you're not experiencing, like you're realizing that the pain that you feel month to month is optional. And so it's definitely like seen like a life changing almost for operators when they start to just have this philosophical change in their business.
And it's interesting too when you like we're talking about a lot about expense management, but when you think about like receipt capture in and of itself, you have a crumpled up receipt that's hard to read. Like Ramp has some of the best visual AI as well to be able to capture things that like maybe are blurry or maybe are like not working as well as maybe it's 6 weeks old, right? And so those things too can become a big problem in this expense management challenge if you're not documenting it properly. So certainly that's another thing I'd nod towards Ramp is how strong their AI is too.
Uh, let's talk about, we just talked about what's in your bank account. It's also understanding where, if money is coming in, right? Every time a booking comes in, you also have to recognize a liability because some of that money you owe to somebody else, right? So it's not only about recognizing the asset coming in, the cash, it's recognizing the liability. So that's another big question where people struggle with, hey, do I really know what my true tax liability is? Do I know how much I've got in advance deposits for future reservations? That's not really my money, right? Those are the kind of questions that plague our we've solved through automation, through better reporting. So this difficulty with asset and liability management, in my mind, comes from three main issues. Clarity. It's not always obvious what portion of the money in your account is truly yours versus what belongs to owners or future reservations. Compliance. Mismanaging deposits or pulling too much money from your trust can put you at legal and regulatory risk. And visibility. Without real-time reconciliation, it's really easy to lose track of advance deposits, tax obligations, and payouts. And if these aren't managed properly, you risk not just mistakes, but serious consequences for your business and your reputation. So with that, we should talk a little bit about what are some of the best practices in asset and liability management. And I like to just share that it really boils down to a few things that you need to do right. And it's not a lot of different things, but there are a few things that you really need to do very well. And we'll talk about that more. So, Logan, do you want to?
Yeah, I think we're talking a lot about like different systems and like the problem, like the job to be done as far as the accounting side of short-term rentals. I think it really boils down to accounting is garbage in, garbage out. And like how can you get the best source data in and then have the systems like a clearing or like really good services like HostAllies, they're going to do the best they can or like really paint the picture and organize things through like this source data. And so I would love your perspective on that topic, Vishal.
Sure. I think that typically what happens is when property managers see cash in the bank, they often assume it's profit, right? But we need the best practices here are a couple, right? First, best practices to set up separate trust accounts that are strictly for client or owner funds, completely separate from operating bank accounts. This way, you can always know what belongs to the owner versus what belongs to your company, and it builds transparency. Think of this as building a protective wall between your client's money and your business operations. The next thing is now that you've separated the assets, the two separate bank accounts or multiple bank accounts, right? It's about separating the liabilities. This is how you represent money on your balance sheet. And your operating entity has its own obligations, things like payroll, office expenses, vendor bills. Your trust entity, on the other hand, it carries its own liabilities, the owner liabilities like security deposits, owner payouts, guest refunds. If you blur these two, your financial picture quickly becomes inaccurate. The best practice is to clearly separate these liabilities on your balance sheet. That means owners can see exactly what's owed to them, and you have a clear financial record that stands up to scrutiny. Separation protects both you and your clients. It shows you're a steward of their funds and not blending them with the company's debts or obligations. And finally, reconciliation. I know we've used the word reconciliation maybe 10 times in this presentation, but it does come down to reconciliation. Even if you separated your accounts and liabilities, errors can creep in. Maybe there's a double entry, a missing owner payment, or a timing mismatch. Reconciliation is your checkpoint to catch and correct these. So these processes are enabled by tools like Clearing, QuickBooks to be able to do these, but you have to invest the time to get them set up and done correctly.
Yeah.
One of the things that I would throw in is I really I think trust accounting, the word trust accounting is like the most perfect word because for this topic is that it's everything, right? Like if you're doing this correctly, then you are building trust. And if and if you do not do it appropriately, or you screw it up, or you start commingling funds or something like that, it erodes trust, right? So it is like the best word in my mind for this. And like just listening to you guys talk, you know, and the topic, right, of this webinar was unlock hidden profits, and I would almost summarize it as you have short-term profits or like short-term tactics and long-term tactics. And to me, ramp and the clearing side of things really help drive almost short-term profits. Like you implement these things, you're going to see improvements to your bottom line. No joke, right? Like because you're going to hold people accountable with a ramp card, like as an example. And if you're commingling funds and you need to correct that, get professional help, right? These guys are offering professional help because if you and that like that needs professional help. Please spend the money to correct that, because that will then drive long-term profits. So not to get up on my high horse, but I have a financial background as well. One of the things that Vishal said at the beginning was correct accounting. It might not be glamorous, but a good, clean balance sheet will drive your valuation. I've been there, done that. So sorry to jump in, but like I had
It's
to.
a
I
great
think
point.
what you said is really these guys. It's really important.
Kevin, you're
What you
like
guys are
you're like Tupac or Nas over here with the double entendre.
saying.
Also like the helpful insights. I love it. Thanks
There
for
we go.
hopping in.
So, anyways,
Well,
I think you hit the nail on the head though, like summarizing it all up into like what the title of this webinar is. There's really, we've talked about two very obvious reasons. One, reconciliations are off, mean you're overpaying owners, you're losing money. Two, expenses aren't being captured, not tied to the right property, you're not capturing that money back, you're losing money. So these are often like, and it's a major blind spot. And I mean, Clear's been around for 3 years now, but when we started, it was like even a bigger blind spot at that point in time. We've watched the industry start to adapt to it, and it's been a really cool ride to be on.
yeah, just wanted to summarize. We've talked about all of these three things really deeply: revenue recognition, expense management, and managing your trust account and your assets and liabilities. But in summary, right, what I want to leave you guys with is, in summary, that a technology-driven, integrated trust and financial accounting can deliver you the clarity and control you need on your finances. This clarity and control applies to these three main areas: automated revenue management, smart expense management, and airtight asset and liability management. With all these processes syncing transparently across your trust accounting and your financial accounting and your PMS system, you unlock new efficiencies and you avoid a lot of common pitfalls. That helps you unlock hidden profits. The process drives the profitability. And by using the reporting capabilities in some of these tools like Clearing, you can actually monitor and see how much more profit you are generating. And even with QuickBooks, the outcome of all of this is spending less time on accounting, making less corrections, spending more time growing your business, and getting the financial visibility you need to be able to grow not only the top line, but also the bottom line. This is how short-term rental operators can scale profitability and security. So since we are skipping the Q&A, I did want to talk a little bit, and I started my presentation with a horror story. I actually want to end with a success story. We have many small and big wins with our clients every day, but this one is very recent, so it comes to my mind. This is a client, it's a mid-sized property manager. We started helping them as HostAllies in April. And we have seen them make leaps of progress month after month. They have worked hand in hand with us to deliver every bit of this progress. So when we started in April, they were two years behind on their financial accounts and taxes. And quite honestly, they had no idea what their current financial position was. And they had glaring issues all over the place. So our first goal with them was to help them to get their 2024 books completed and their taxes filed. Then we jointly implemented clearing to get their owner statements accurate. Then we streamlined their expense management process even further with using RAMP and clearing. And finally, we integrated clearing into QuickBooks. And from June onwards, all the revenue in their P&L was recognized in an automated way through journal entries when we could really produce accurate profit and loss statements. And it took us a while, but finally we attacked the balance sheet question of trust account reconciliation, what Kevin was talking about long-term profits. And I'm very happy to say that we were able to accomplish 3 things. Today, the client can reconcile their trust bank and liabilities with almost 100% accuracy, and they know exactly what their financial position is. Number 2, the client has over the last few months put strong controls on their expenses. And as a result of that, their profit has increased significantly. And finally, we've come up with a monthly process where their owner statements go out on the 7th. The management allocation of funds gets completed by the 9th. Their trust account gets reconciled by the 12th, and they can deliver their monthly financials, the P&L and balance sheet, by the 15th. The lesson here is within a few months, it is possible. It's possible to go from a very unreliable, messy financials to accurate and trustworthy financial statements, and to set up a process to work efficiently so you can get that time back to grow your business while making more profits. So since Kevin, we're skipping the Q&A, right? So I could just move into the next thing. If the path to integrated short-term rental accounting feels overwhelming for you, help is at hand. At HostAllies, we offer a personalized guidance. Whether you're optimizing initial setups, automating daily workflows, or looking for an end-to-end review of your systems, every business is unique, and our free consulting session is designed to find out exactly what makes your operation tick and where improvements will pay off. Don't let these accounting headaches slow your growth. Reach out and get an expert's helping hand, especially when it comes to trust account reconciliation and trust account management. So we're looking forward. If you need help, please reach out to us. And with this, I'd like to say a few closing words. Thank you, everyone, for joining this session. And we're excited to hear from you more and understand how we can help. And with that, Corey and Logan, would you have a few words to add?
Yeah, Logan had to jump. He's jumping. We started a little late, so he sends his best. He says thanks for everyone that joined and for being here today. Also, just if you haven't looked at Ramp yet, like you have so many different systems out there now looking into the expense management side of things. I would encourage you to look at Ramp. I mean, the way that they're doing things is one of the fastest growing companies in the world right now. It's a very interesting solution. And then when you combine it with industry specific tools, you really do get that industry specific solution. So tying it with clearing does a lot there. But ultimately, if there's any questions around software, I mean, I was here to kind of bring some things that I've learned through my journey with clearing and whatnot. And I hope that kind of painted a little bit of a picture of ways to improve or ways to, check yourself in that process, but always around and happy to help. Feel free to send me an email. Thanks, Michelle, for having us on today.
Thank you, Kevin, for hosting this.
Yeah, no, thanks, guys. Just to wrap up, I know we're a little bit long here, but thank you to Logan, Corey, and Vishal. Just the last pitch on VRNation. Become a member, right? This is what we do. This is what we offer. And our big event is coming up here in April. We will have additional webinars and other information that we get sent out in a more timely fashion. But the big event is coming up April 28th through the 30th in Denver. You can find all information on vrnation.com. Come and see us. Thank you so much, everyone.
Thanks, everybody.
Thank you. Thank you, everyone.